Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, September the 24th. The year's 2021. Let's talk trading. Time for the weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. So, we'll take a look and see what's going on this week. The pound has been in a steady downward motion this week. And on the gaps, we have one pair that hasn't filled the gap. You can see here we did not hit the weekly pivot, so that 37.94 target's going to be hanging out there for a while. We're 66 pips off the weekly low and 77 off the weekly high. Very interesting chart right here, or I should say how the candles, what they've done on this chart's kind of interesting. For the week, we put in a opening range that was started inside the monthly opening range and then ended inside the yearly opening range. And you can see what's happened today. We broke outside of the monthly opening range here at 37.30. We dropped into the yearly opening range at 37.03. And yesterday we opened below the yearly open. I think I was alluded to the fact that I had a trade on at the yearly open and I didn't ride it all the way up. So once again, yearly open, we're 31 pips above, monthly open, 80 pips below, weekly open, 65 pips below, and the daily, we are 46 pips below at the moment. We penetrated back into the inside bar range from 3 days ago. And looks like there's more inside bar action, some of the other pairs. Today, 4 pairs over 100 on range, with the pound clocking in at 79 pips. As you can see, we entered and exited that upper daily wick zone there, or the daily upper wick zone. We took out the pivot a few hours ago at 36.93. And you can see here we stayed below the weekly open all day. Green rats had a little feast here. Looks like they're getting ready to feast again. And the pivot trading plan said near the pivot point, trade long. Well, that didn't work out too well. Near S1, the bias is long. We haven't been near that bias. Or we haven't been near S1, rather. Looking at the missed pivots, we have a missed pivot from 4 days ago at 37.61. We missed this week's pivot. And we have taken out the monthly pivot. And as I showed earlier, we entered yesterday's upper wick zone and exited to the south. Looking at the weekly ranges, the smart ranges, 144 pip range for the week, which is only in the 16th percentile. But what's interesting is yesterday we had a 140 pip range. And that was for the daily, and that was in the 91 percentile. We didn't break out at a previous week's high. We did break out at a previous week's low for 128 pips. And at the moment, high minus the close, 75, and close minus low, 69 for you rat traders. And I just see something I think I want to change here. Now this is the fun part, trying to find them all. I want to change these to also be current. Let's see what we have. Close minus low. High minus low. Previous low. I'm looking for high minus open. High, open. Let's put that on current. And open low. Let's change that over to current. So for the week, the high minus the open was 12 pips. So in other words, if you were trading the weekly buy zone or just the weekly open cross to the upside, 12 pips was your best trade. To the downside, we had 132. And looking at the Walmart lines here. No, actually, these aren't the Walmart lines. What we have, these are, I remember I switched these over to the psychological. So you can see we just crossed the 75. We attempted it, looks like 1, 2, that got closed 3 times, finally broke through. And on the lower higher low chart here on the M1, you can see the price action playing off of these 2 balls. 67 gave a nice trade here. And yesterday was FOMC. I hope traders had some fun with it. Let's see, there was something I wanted to go over on that. I think, where was it? Let's try the hourly chart. If you look at what was going on yesterday, so yesterday was the 23rd. So from this point on, you can see, just looking at the price action, we had a little range here, and we set up a little range here and broke out, and then the same thing just kept happening all the way up. Now, this was when the news came out, this big bar here, that's what I would call a return bar, and you see price return to it. Now, when it made its move up, I said this was also a return bar, and you see price has made its way down to it. Now, we've got another return bar possible here. And so if you're wondering about the return bars, I look and see, doing the frequency distribution of the range, which you can use the smart ranges to actually tell you. So you can see here, we had 140 pip range on yesterday's bar. And if you come down to the hour time frame, oh, this is not right here. The hour time frame, oh, it doesn't show enough. But you can see 36 is in the 91 percentile. And that bar was something like 100 and some or 90 some pips. So you can see, I believe it was in the 99 percentile when I was trading live yesterday. Actually, this should be weekly time frame. And so when I saw that, it was one of those where, yeah, that has to be a return bar. And you can see here, it just moved up. That was a return bar because that also had a range of, let's see, that was 17 pip range. But in the scheme of things, when you see these bars getting much bigger than the few previous bars, it's almost like price is going to return because that's a fast, that you consider that a fast move. And so now this red candle is a return bar in my eyes. This red candle is a return bar, and you can see price just missed it by about 2 pips. And this green candle was a return bar, and once again, price came down to it. So I believe TRO 2018 return will actually paint those return bars for you. And what you do is you give it the number of pips you want to consider as a threshold. Anything over that would be a return bar. And what I found out for those who like to scalp trade on the M5, if you get a bar that's, say, greater than 7 pips, that's usually a return bar. So let's see, does this one qualify? It's just, yeah, this one qualifies because we've got about 11 and some pips. So that was a return bar, and price returned to that level. It's just something that I've observed on the charts. And one other thing to note, when we've got these news trades happening, things like this, you really have to be quick. So maybe you only grab 5 or 10 pips out of the move. But the thing is, if you had held on, you might have seen a 20 pip drawdown before it came back. And you never know if it's coming back. So you really don't want to take those chances. And just remember, I talked about trade only one. So if you're trading return bars, only trade return bars. Don't throw that in with something else, because that's just one more level, one more thing to track, one more thing to be confused about. And especially if you're, day trading, intraday trading, you really don't have time to think about a bunch of stuff like that. So, especially when the trade's open. Now, when the trade's closed, that's when you can look over here and look at the gauges. What's price done? What's price doing? To determine whether or not you want to enter that next trade and at what level you're thinking about taking profit, etc. So, for example, here, I'm looking for price to get back to this level, the open at 91. And one of the reasons I'm looking for that is, I don't have the dots on this chart, but there was a bunch of high lows right in here. And so that's why I'm looking for price to come back in that zone. But it might not go straight there, because you can see here we just put in a 3 ball. There's a good chance price could now reverse and come back down and start that cycle again. So, fellow traders, I hope you had a profitable week. I wish you a fun and safe weekend. And when you come back to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.